Hello everyone. So in anticipation of the Fed rate cuts, what are the things that you need to do right now before that time comes? I recently did a video on different exit strategy that you can take. You can go to my YouTube channel, which is Blue Ocean Multifamily Group, to check out the video on different exit strategy. What are the things we need to start doing now that the Fed is trying to cut rate? What are the options available to you at this point? Number one, something I'm trying to do is to refinance my primary home because I bought when it was about 7% in interest rate at that time. I am looking at refinancing to bring down my interest rate from 7 maybe to the higher 5 if the opportunity comes, because right now interest rate is at 6.5. This is without the Fed cut. This is just because there is excitement from lenders that the rate will be cut and all that. But imagine when the Fed does that, what that will lead us to. There are 6% or something around 5.8 to 5.9. The opportunity that will bring for you at that time is for you to consider reducing your interest rate. So for your single family, that will help your mortgage payment go down. So if you're paying something around 3,000 and plus, you might end up start paying 2,000 plus. That is a massive reduction on your out-of-pocket payment for a home that you currently stay in. And if you are using it for rental or investment, vacation rental and all that, this has the opportunity to increase your cash flow. So when you're paying lesser for your mortgage, your cash flow tends to go up. So you might need to consider refinancing as an exit strategy at this point. Another opportunity that we can see that might happen is for you to reassess your investment opportunities. So for people that are trying to sell their properties, maybe because they have a bridge debt, this might just be the right time for you to reconsider selling. You might just actually need to reassess the entire property that you have, especially if you've been properly managing the property, that is, you've improved on the net operating income. And peradventure, the reason why you were not able to refinance was because of the debt service coverage ratio. Because of the interest rate, we found out that some properties were not able to debt service ratio because of the interest rate. So since the Fed is intending to cut down the rate, you might just need to go back to your lender and see what kind of debt service, whether you'll be able to meet up with their debt service coverage ratio. These are for properties that are operating well already, but because of the interest rate, they've not been able to meet the lender's requirement of the debt service coverage ratio. Typically, the standard is 125, so you might need to go back to your lender to see if your current property might meet up to that standard. Instead of you selling, this might just be an option for you. So you need to go back and reassess your investment opportunity and see if this will work for you. Another opportunity that this might present to some of us, for people that are looking at buying a house, maybe their primary home or a vacation rental home, but you've not been able to buy it because of the interest rate. This might just be an opportunity for you to go and buy one at a lower rate compared to where we were as of 2 months ago and all that. And not just for you to go to meet your lender, lock your rate. So for a single family, it's very easy for you to lock your rate from day one. You can easily lock your rate. But for a multi-family, it just depends on the loan. So if it's an agency loan or a Freddie, it's easy for you to lock your rate at the beginning. So a Freddie small business loan, yes, can give you the opportunity to lock up your rate at the beginning. But a Fannie, you will not be able to lock up your rate until towards the end of your closing. So a few days to your closing, you can lock up your rate. I'm just talking about those people that are trying to buy a single family or are trying to buy a smaller unit and they're using a Freddie agency loan to do it or a bank loan to do it. This might just be an opportunity for you to lock your rate at this point. I do not envisage that there will be another interest rate cut this year because one of the things the Fed will want to do is not to politicize the entire process. Because of the election, this might not happen again. So take advantage of what you currently have. They always say a bird in hand is better than thousands out there. So take this opportunity now when next year comes to be a different strategy, and you can take advantage of that as well. Another opportunity is that the reduction of interest rate has the ability to reduce the cap rate. So for some of you that have been very conservative with your underwriting, this might just be very good for you in the sense that because you were very conservative, that is, you projected that instead of the cap rate compressing is going to increase, this rate cut might just compress your cap rate, and that indirectly is going to increase the value of your property. So you need to just keep watching how this is going to affect the value of your cap rate. And I'm particularly talking to those people that are intending to exit anytime now. So you need to go back, reassess the effect of this. This has the ability to reduce your cap rate, and that is the value of your property might go up. You need to constantly monitor the market and see what opportunity you can get. If you are watching the market and based on your market, the cap rate is compressing, that might just be a good opportunity for you to sell. So take advantage of it. Keep studying the market, keep monitoring it. If your loan is almost due and it's time for you to exit in terms of sales, this might just be the perfect time for you to, because cap rate might compress. Another opportunity that might unfold might just be that for those of you that have been looking to sell, that is, you want to exit, you are actually done, maybe you've achieved your goal, you've achieved everything you need to achieve, or the property is not performing well and you just feel that this is the time for me to sell. This might just be the time for you to sell, because many buyers will be out there looking for properties to buy, as well as sellers. If you are looking to buy, there will be many opportunities for you to choose the right assets for you, because there will be competition. Also, if you are intending to sell, this might just be the right time, because we found out that sellers were getting low-ball offers months back and all that. This might just be the perfect time for you to put your property in the market for it to be competitive. So if you're looking at selling, this might just also be an opportunity to sell, because you have more buyers try looking for assets to buy at this point in time. This is the last one. Everything I've said is not limited to all the opportunities I've just listed out. It's not limited to all the things I've just mentioned, but this is the last one I just want to mention, is the probability of cash flow increase. So due to this rate cut, and let's assume you decide to go through the refinance option. If you decide to do that, then this has a probability of increasing your cash flow. Increasing your cash flow means that your NOI must have improved and all that, because maybe you were able to reduce your mortgage payment and all that, so that would have increased your cash flows. This might just be a good opportunity for you to take if you intend to increase cash flow on your property for your investors. This might be, but there's a caveat in all the things I've mentioned. Remember that you have prepayment and yield maintenance for some of your loans. So you need to go back to your loan document to see what your lender's terms are in terms of prepayment and yield maintenance, because if you just decide to exit without going through those things, you might be slammed with a lot of penalties, and refinancing or even selling might not even be an option at that point. So you need to go back to your loan docs and see what are the options you have to exit in terms of refinancing or selling. That will now guide you in whether to sell or to refinance, or whatever decision you intend to take. Don't forget, the loan doc, those things the lenders have put out there are very important. You cannot afford to ignore them. I hope this content was very good to you, and I just said I should put it out because I as well am in anticipation of the rate cuts, because I'm looking forward to refinancing some of my assets. I hope this was good to you. Please have a wonderful day. Thank you.